Hello, traders. Gary Wagner here. Approximately 3 o'clock in Honolulu, 9 o'clock in New York on Thursday, 7th day of October 2021, and this is the Daily Report for Gold and Silver. In less than 24 hours, we will have the answer to a very important question, and that is, how strong has the economic recovery been? They will realize that through the numbers released by the U.S. Labor Department's jobs report, currently forecast between 400 and 500,000 new jobs being added in September. That is partially factored into the market. So what we want to look at is whether or not the actual numbers come in at expectation, above or below it, because those are completely different scenarios. If we see a strong jobs report, it would give the Federal Reserve ammunition to begin tapering sooner than later. We'll talk about that, but most importantly on today's show, we will look at key support and resistance levels. We are less than 1 day away from the announcement by the U.S. Labor Department as to how many new jobs were added last month in September. Currently, forecasts vary between 450,000 and 500,000. The difference is who did the polling. Reuters did one poll and the Wall Street Journal did the other. Gold futures did sell off, closing at $1,759 in active trading in New York. It traded to a high of $1,768, a low of $1,752, after opening at $1,762.90. Currently, we do have gold pricing below the close in New York as it trades overseas at $1,755.50. Fractional changes in the dollar, currently fixed at 94.21, and that's down 0.07%. This first chart that we are looking at is a simple candlestick chart, each candle representing a single day. We have included two moving averages, both simple, the 50-day and the 21-day moving average. The data set used for our Fibonacci retracement begins at that double bottom that occurred in March of this year, when we had gold trading at around 1673 up to about 1920, and that, of course, occurred right at the beginning of June. When we do that, there are a couple of key areas that have earmarked current resistance, and one is based upon Fibonacci. The other is based upon moving averages. Now go ahead, uncompress this chart so you can get a better indication. This first line here that comes in is a key and critical Fibonacci level, and it concurrently happens at roughly the same price point as the 21-day moving average. That is currently fixed at 1,765. We have felt that that was a solid level of resistance. We do have historical data recently that conveys that, because if you look at the area just prior to the market moving lower, it had created what is called a scouting party. That's a term labeled by Steve Nissan. It is not a candlestick pattern, but it is when a market is moving up and hits a new high. It is a way of expressing the bulls checking the fortitude of the bears. If the bears still control the market itself in terms of price action, you will see it close below or decline below, as we have seen right here. If you get a point in which it breaks above that price point, a new high, and stays there, in this case it's only 2 days, it would have to be at least 4 or 5 trading sessions. It is simply called a beachhead. Right now, I see significant resistance at this price point. However, it must be noted that this market will move higher or lower based upon the actual numbers that come out tomorrow when the jobs report is released. Forecasts are between 450,000 and 500,000. The lower number was created by a poll from Reuters, the 500,000 from a poll by Dow Jones. And so what we are seeing is that that is being fairly baked into current market pricing. So if it comes in at expectation, we might not see too much movement, although it would still pressure the market to the downside because it would signal that we have seen a dramatic improvement from the August numbers of 243,000 and give the Federal Reserve the necessary data and ammunition, so to speak, to roll out tapering sooner than later. In October, November, or December. November is the month that many analysts are looking at for the date of initiation. If, in fact, the jobs report comes out with the same kind of tepid results that we saw in August, that would be telling us, the Federal Reserve, and economists that the Delta variant, which we know has been subsiding in the United States, has still not subsided enough to warrant a strong increase in new jobs created. And if that were the case, you would look to see gold trade and break above 1765 to 1770, and then we would have a new resistance area, the 50-day moving average, at $1,781. Recently, on October the 29th, we had silver trading under pressure and actually traded below 2150, and on that particular day closed at 2150. You can see that on this weekly chart as well as this daily chart. However, when we take a look at the entire range throughout 2021, which I have notated by adding this vertical line signaling the beginning of the year. Of course, that is this line here. What is clear is that the lows achieved at the end of October is the lowest value we have seen silver trade to during this calendar year. Silver is trading overseas now, and after finishing lower on the day, you can see that the trading in Australia has created yet a lower pricing. It is represented by the small red line, and current fixed price is $22.58.5. This is the open, the bottom of the small green candle, and then the closes on top. We have a red candle, which means it opened higher than current pricing. We still see resistance like gold at the 21-day moving average. However, in terms of support, because it has sold under more pressure than gold, we don't see any real major support coming into silver until approximately $21.53. This is me, Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.